Hello, this is the TradeSite US Stocks, Futures, and Forex Market Preview for the week beginning Sunday, the 6th of February 2022, ending Friday the 11th. Keep in mind that we're, because this was already the first Friday on the 4th, 11th, so then we get this week coming up, and then the week after, we have options expiration on the 18th, leading into President's Day weekend with the Monday holiday on the 21st. So that's always an interesting one when you have options expiration and then you have a 3-day weekend. Hope nothing goes wrong there. Here's a look at the dollar index daily chart. As you can see, we had the 13 sell signal we talked about last week that was forming, and we dropped right off of that. And where did we go? Right to the red static trend line, as you should. That's our target of the move, so that worked perfectly. Let's look at a couple of the pairs real quick on the chart here. So a 13 buy signal on the euro dollar, and it bounced. Obviously, it's usually just the opposite of the dollar index. Pound dollar, you know, a little bit of a bounce here this week as well. A couple winners in Forex. It was a decent week for Forex, actually. Aussie dollar, not much here, although there was a 13 buy signal right at the bottom. Let's look at the yen-based pairs. Euro yen, big week, and the pound yen, decent week up as well. Now, in terms of the intra-week action, 30-minute candles, here's the euro dollar. So high to low for the week is actually 350 pips. Not bad. Why we even made money on the euro this week. And pound dollar, high to low for the week is actually less than that. It's only about 220. But it was a consistent move up and a couple of trades that carried over. That's what we like to see. So a decent week in Forex to get us rolling here into February. Still waiting for Forex to get more exciting. All right. Here's the ES front month futures contract. This is the daily chart of the broad market in futures form. And, you know, as you can see, we kind of bounced back a bit from the lows. And I will tell you that if you draw the oopsie, hold on, did I not do that right? I didn't. Now I've got it. High to low on the fibs. Oops, sorry, let me lock that in place properly. Guess where we landed at the high? The 62% retracement, 61.8, which is fairly common. And of course, if you draw some of the trend lines around that, we never even really quite got to the downtrend line that was in place. So, it was a good bounce off of those lows, but we're not remotely out of the woods, obviously, yet. And, again, if we crack the lows, which there's still a lot of room to the downside to take us out, as Rich showed us the other day, to take us out of the bubble. We got many standard deviations above the long-term trend line that's been in place for about 14 years now in this COVID bounce. And there's still a lot of room to come back and just put us back into that uptrend line. I think the S&P puts us somewhere right down around 3,600 for that to happen. So that's a 1,000-point drop on the S&P. So be careful with that one. Here's the S&P cash. So it was up 23 points on Friday and change, but it was down the day before. There's kind of a floating island almost. Not quite, but close to a floating island there. From the Wednesday trade. Nasdaq 100 up 193. Again, look at that candle on Wednesday. Not quite a floating island, but really close to it. We'll look at that on the intra-week action here in a minute. The SOX was up 20.53. The biotechs up 18. Russell 2000 up 11.32. Crude oil up $1.65. New closing highs there at 91.92. Gold, and again with the cold around the rest of the country here and another big storm hitting, that's going to increase the energy needs. Gold up $4.70, but gold, again, as we keep saying, doesn't seem to care about the inflation, doesn't seem to care about the rates, doesn't seem to care about almost anything. Advanced decline ratio in the Nasdaq was positive at plus 1,097 on Friday. Remember, it was very positive Monday. It was positive Tuesday. It was negative on Wednesday. It was very negative on Thursday. And then comes back to plus 1,097 on Friday. Meanwhile, in the New York, it was negative 320, negative 315. So the tale of two markets, right? Negative in the New York side, but positive on the Nasdaq side on Friday. Quite a discrepancy. Nasdaq volume, though, this is the disappointing part. Only, look at this volume just drop, right? We're down to 4 billion shares. That is the lightest volume day. Friday was the lightest volume day so far in 2022. And again, we talk about the fact that as they unravel, as the Fed unravels, as the rates go higher, as the life gets sucked out of the market here, you're going to have a harder time keeping that volume up. Look at the start of 2021, look at the blue line, the 10-day moving average, where 10-day averages were up in the easily in the fives, as high as 8 billion shares a day. That's the averages. If you go back to when COVID started, we got a big turn up in volume with all the money that was printed. That got the numbers up into the 4 and 5. That's the 10-day moving average. Again, I'm focused on not just individual days. 4 and 5 billion share range for most of that year, then a bigger bump in 2021. But again, as the year starts to come out, expect that number. We had dipped over Christmas. That usually happens at the end of the year. But let's keep an eye on this because it's important. If we start to dip into the threes, the low threes, we're heading back to more normal market volume, something we haven't seen for a couple of years. It's going to be interesting to watch. The trend closes at 0.6, and what did I tell you the other day? A couple of big numbers were going to drop off that 10-day moving average, and they did. And if we got some low readings, the Thursday reading wasn't super low. It was 1 point something, low ones. But then the 0.61 number on Friday, and look at this, the 10-day moving average, 0.84. Remember, anything under 0.85 on the 10-day moving average is a sell signal on the broad market. When it hit at the beginning of January, that's when we started, our second week or so, that's when we started to sell off. We're getting it again here this soon after. And remember, I just talked about the fib retracement and everything. Lined up really well with this. So just, again, be ready on the short side. What we don't want are just gaps down. We would like to see the market actually sell off intraday so it's tradable for us. The VIX dropping on Friday back to 23.22, down $1.13. Apple loses 29 cents. Amazon, which was why we got a little rally after the prior disappointment the day before with Spotify and Facebook. Amazon's up $375.88 on their earnings. Look at that, what we call a floating island. It was a downside floating island, right? We gapped down Thursday and held, gapped back up Friday and held, leaving that 1 day below on Thursday. That's a floating island. Interesting. Facebook down 67 cents. That's kind of nothing there, but after being clobbered the day before. I mean, this stock's down, bordering on 40% from the highs. Google up $4.06. Had made new highs just 3 days ago, but coming back. Goldman Sachs, did I say down? Google was up $4.06. Goldman Sachs up $8.70. Netflix up $4.57. Peloton up 35 cents. But again, nothing pretty there. Remember, their earnings are coming this week. There was a rumor after the bell, very convenient, rumor after the bell that maybe Amazon or Nike was going to buy Peloton, but their earnings are next week. So if this stock gaps up Monday morning on this supposed rumor that they might be getting acquired, but then the earnings fail really badly, worse than we were expecting later in the week, that's not going to be pretty. TLT, the 20-year bond ETF, down $2.08. So bonds lower, rates higher. Tesla up 32.18. Zoom up $6.16. Bitcoin now back above 40,000 as I do this on Saturday evening. And the Dow was down 21 points, nothing big on Friday. All right, in terms of intra-week action, let's take a look at the 5-minute charts on the, let's go to the 10-minute charts on the ES. So we can see the whole week. So you can see the back end of the prior Friday, and then what did we do here? So Monday, fairly flat opening, drifted higher all day, surged at the last minute. Tuesday was basically dead flat until the last hour, really untradeable on Tuesday. Wednesday, a small gap up, basically took hours to fill the gap, drifted back, another virtually untradeable day, closed at the highs of the week. And then Thursday, we gapped down. That was the Facebook and Spotify stuff, and started to really sell off. And then Friday, even with the Amazon, we didn't really gap up, right? And we actually tried to make new lows, then came back. So we closed positive for the week there. If you look at the Nasdaq side, you get pretty much the same story and just slightly, barely positive for the week. Nothing exciting at all. All right, in terms of everything else, nothing there at all. Let me look at the economic calendar for the week ahead, and we won't go through all of it, but we'll cover some stuff. New Zealand's closed on the first day of the week. Japan leading indicators going into Monday. Unemployment rate out of Switzerland. U.S. has consumer credit at 3 in the afternoon. We've got bank lending and current account out of Japan going into Tuesday. French trade balance, Italian retail sales, M2 money supply, new loans, NFIB small business index, trade balance out of the U.S., IBD tip economic optimism number, Westpac consumer sentiment, inflation expectations. Wednesday, Japan's preliminary machine tool orders, German trade balance, Italian industrial production. Final wholesale inventories here in the U.S. and crude oil inventories at 10:30 on Wednesday. I got some Fed members speaking, two of them actually. We got PPI out of Japan, China's foreign direct investment. We've got CPI here in the U.S. on Thursday. That's one of our big three, so we'll be half size for Forex ahead of that. Mortgage delinquencies, natty gas at 10:30, 30-year bond auction at 1 p.m. Eastern Time, federal budget balance at 2. Bank holiday for Japan to close out the week. German final CPI and WPI, preliminary GDP out of the UK, index of services, industrial production, manufacturing production. Swiss CPI, and then the US preliminary University of Michigan sentiment. So that is that in terms of everything. All right. That's it. We will have to just see what we get. Again, we've got a clean week. No options expiration until the week after. Got a couple weeks till the next holiday on Monday the 21st. Right after that options expiration. Hopefully we'll get some excitement. Remember, watch that trend signal. That's a big deal. And obviously where we're at in the market is a key point. Having retraced to a fib and that downtrend line or close to it. Charts as usual brought to you by eSignal. If you've not yet taken the trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading week.